early. So hello and welcome to the 789th meeting of the Economic Club of New York. I'm Barbara Van Allen, President and CEO of the club, and it's a pleasure to be here with everyone. Before we begin, I want to extend a warm welcome to students joining us virtually from Rutgers University and NYU, as well as members of the 2025 Fellows class, a select group of diverse, rising next-gen business thought leaders. The Economic Club is proud to stand as the nation's leading nonpartisan platform for discussions on social, economic, and political issues. As many of you know, we've been doing this for more than a century and are really proud to provide a platform for thought leadership and dialogue. Today, we're privileged to continue that tradition and welcome back our distinguished speaker, Michael Saylor. Michael's the executive chairman of Strategy, a publicly traded business intelligence firm that he founded in 1989. Under his leadership, Strategy has become a major player in enterprise analytics and a significant holder of Bitcoin. Beyond Strategy, Michael is a serial entrepreneur and technology pioneer. He founded Alarm.com, a leader in smart home security, and holds over 48 patents. He is also the author of The Mobile Wave, a book that anticipated the widespread impact of mobile and digital transformation. Committed to education, Michael established Saylor Academy, a nonprofit that's provided free online education to over 2 million students worldwide. He's also a vocal advocate for the Bitcoin standard, promoting financial innovation through platforms like hope.com. Michael holds dual degrees from MIT in aerospace engineering and the history of science. Today's format will be a fireside chat, and we're honored to have club member Anna Nikolayevsky as our moderator. Anna is the founder and CIO of Axel Capital. Time permitting, they will take questions from the audience. A reminder, this discussion is on the record, and we do have media in the room and online. We're going to conclude promptly at 1 for our lunch. Now, without further ado, please join me in welcoming Michael and Anna.
So thank you for coming. You were last here, I think, in the first quarter of 2022. It was a slightly different environment. A lot of things have changed. Your company names has changed. Gary Gensler is gone. We have a new administration. Life looks very exciting right now. Tell me what you think that what you're focusing on right now, and what are your priorities?
I think that this is probably an inflection point. It's the point where you have the most transparency or clarity with regard to what happens over the next 4 years. You have the least amount of uncertainty. So the risk has been stripped out of the industry. The opportunity remains, but mainstream investors are very slow to pick up on that. And, you know, I said before, the secret to getting rich, to making 10x your investment, is find an idea that everybody needs, nobody can stop, and very few people understand, or where the mainstream disagrees with you on. And that would be a description of Amazon in 2010, or Apple in 2010, or Google, or Facebook. It's like no one can stop it, but the conventional investor thinks they should diversify out of Amazon into 20,000 other retailers, or diversify out of Apple because the stock got ahead of itself into 20,000 other computer companies. So what I think right now is we had a couple of inflection points in January of 24 when Gensler approved the spot ETF of Bitcoin. That was a massive embrace. At that point, Pandora's box is opened. Bitcoin is a commodity embraced by mainstream finance. What happened next is $140 billion of capital flowed into those ETFs over the next 12 months. Every single regulator in the world flipped their tune you know, everybody follows DC. So everybody talks about, you know, digital assets and crypto and innovation, but as practical matter, Australia, Singapore, Hong Kong, UAE, Brazil, all of Europe, everybody waits until somebody in DC says this is okay, and then they all follow like dominoes in a hurry. So that was a big change. But at that point, the forecast would have been Bitcoin's going to grind forward, everything else is going to trade sideways or get gradually beat to death. And that got to peak, we got to peak anti-crypto. It was like in April. In April, it was like Bitcoin is winning, everything else is losing and getting driven to zero in this industry. And that's the point. That's the point when Trump's campaign was at a low, and the crypto industry thought there's a certain death, and Trump needed allies, and the crypto industry needed a sponsor. And so everybody in the Bitcoin and crypto industry went to Mar-a-Lago. They joined forces with Trump. There was a complete shift. Trump embraced the industry. All of a sudden, the Democrats panicked. And over the weekend, they went from rejecting the ETH ETF to approving it. On Friday, they were going to reject it. On Monday, they were going to approve it as they panicked. And so the next period from April to like June or so was building momentum, a lot of uncertainty. But, you know, every single crypto player, every crypto exchange and every crypto entrepreneur got sued by the SEC leading up till about May. And then the next inflection point is Pennsylvania and the attempted assassination. And Trump stands up and says, fight, fight, fight. Elon Musk says, that's my man. All of Silicon Valley flips. All of cyberspace flips. All of a sudden, Joe Rogan, Elon Musk, all, you know, Mark Andreessen, all of the techs, you know, and you saw, you know, they're all kind of radicalized, David Sachs, and they all decide that they have to get Donald Trump elected. And momentum builds until we get to November 5th, and it's like, it's uncertain. But what you have is you have a Democratic administration where you have there's one person in the administration, Gensler, whose opinion is, well, I'm not going to snuff Bitcoin out and everything else is an unregistered security and it should roll over, die, and go to zero. And then you have the Republicans who are like, well, we don't know what's going to happen there. The next morning, it's a triple sweep, a red wave. And all of a sudden, the Republicans control the Senate, control the House, control the White House. And in rapid succession, you get Tulsi Gabbard, who is a Bitcoin believer running intelligence. You get Robert F. Kennedy, who wants to buy 4 million Bitcoin, running Health and Human Services. You get Howard Lutnick, who is a big Bitcoin believer in commerce. And then you get Atkins, Quintez, and Bessence, all pro-crypto, pro-Bitcoin, running the SEC, the CFT, and Treasury. And then you have the president on the day of inauguration at noon. When we inaugurated the 47th president, his family's company bought $47 million of Bitcoin at noon. Okay, so there's a certain signal here, right? And then what happened is the SEC, and this is even before Atkins is seated, the SEC basically dismisses or withdraws with prejudice, which means that they're just permanently withdrawing their lawsuits against Kraken, Coinbase, Robinhood, Cumberland just yesterday, OpenSea, Bored Apes, I forget the rest, wow. Consensus, and in essence, what you see is the policy of the Gensler administration, which was sue everybody and shut everything down and close the capital markets, is completely undone. And so what am I looking at? I think the next 4 years, I think that it's pretty clear there's consensus. There's a libertarian administration that's in favor of low taxes, low government engagement, pro-innovation, freedom. They're very pro-Bitcoin, they're pro-crypto, they're pro-business, they're anti-censorship, and you have a set of fairly ideologically driven reformers in every part of government, and none of them are wallflowers. I mean, this is a much more powerful, much more motivated cabinet than you had in 2016. I think this is the most powerful agents of change in our life. I mean, you could look back to Thatcher and Reagan and say something similar sort of happened back in the 80s. But this is even more aggressive because in addition to all of those personalities and Trump, you also have Musk and something unprecedented, which is every single day something happens in government that conventional wisdom would have suggested is utterly impossible. It's been tried 100 times before. It will never work. And what's happened is, I think if you introduce the right ideology, you've got a totally different Trump. Trump 47 is different than Trump 45. And if you have we say about Bitcoin, it's on a need to know basis. As long as you're comfortable, you don't need to know. But when you have a near-death experience and you decide life is hopeless and you're going to zero, right, and the end is near, you all of a sudden open your mind to a new idea. And I think Trump 47 went through the Biden 46 and came out a very different person. And now we're staring at politics that's boosted by AI. Like you send 20 intelligent people into the government with AI and they can like recode and sift through, what would be 1 million people's work. And they can do it in like a day or 2 days. And so I don't think the world's ready for AI boosted geniuses with data access. And I think when you combine that with a platform where Musk can send a message directly to 200 million people in 60 seconds, all the conventional wisdom, like every government reform of 100 years that failed, it's like, well, they didn't have X and they didn't have AI and they didn't have a post-COVID world where people are much more distrustful of institutions and more embracing of reform. So,
Michael, what you
It's a
once
new thing.
mentioned that you expect the Bitcoin market cap to reach $200 billion. $200 trillion.
trillion.
Can you explain how you got to that number?
let's talk about Bitcoin, right? What is Bitcoin? It's not digital currency, it's digital capital. What is the use case of capital? Wealth, preservation, and growth. Why is Bitcoin digital capital? Well, because it is a crypto network backed by digital power that's capped at 21 million, that's universally embraced as a commodity, not a security, not a proprietary token, that's beyond the control, corruption, or censorship of a government, a corporation, an individual. So it is a crypto monetary network. It went from nothing to 2 billion to 20 billion to 200 billion to 2 trillion. It's been growing more than 60% a year for a decade. What's my forecast? My forecast, it will grow. It'll decelerate from 60% to 20% over 20 years, over 21 years. Why 20%? Because the cost of capital, the S&P is growing 12 to 15%. Bitcoin's going to be about 50% better than the S&P. Why? Why is it going to be 50% higher performing? And why? And by the way, it's going to go from 60 vol, 60 AR to 20 vol, 20 AR. Why will it be more volatile than the S&P index? Why will it be higher performance than the S&P index? Because Bitcoin strips the risk off of all physical real estate. So if you wanted to hold real estate as a long-term store of value, you know what happened in LA, you know what happens with hurricanes, you get fires, floods, you get rent control, you get politics, you get expropriation. What's your real estate in Nigeria going to be worth when the currency goes to zero? So it strips the real estate risk off of tangible property. It strips the currency risk out of securities. Like I give you every single company in Africa, what's it worth when the currencies go to zero? Or you can own anything in Argentina when the currency goes to zero. Your bonds, your securities, all these things collapse because they're all currency derivatives lightly constructed. So Bitcoin doesn't have counterparty risk like a security or a financial instrument. It doesn't have physical risk. And finally, it's literally without counterparty risk to a creditor, a culture, a country. If you're owning Picasso's, you have counterparty risk to a culture. If you think you're insulated because you own the Patriots, you have counterparty risk to a different culture. So you don't want to be counterparty to any political entity. You don't want to be counterparty. What iPhone are you on right now? Is it like the 16 or the 7th? Like, what about the iPhone 99? Okay, well, here's the thing. In the year 2100, Bitcoin is going to be 1/21 millionth of all the money in the world. That's never going to obsolesce. In 1,000 years, you're going to want to own 1/21 millionth of all the money in the world. But in 100 years, it's not clear what product or service you buy today you're still going to want. So Bitcoin is like, the whole idea is I have an investment of capital for a long, long time without counterparty risk to anything, any company, any idea. And if you combine that, which makes it higher performing, with this other idea, which is that it is unregulated, you're trading it on 1,500 exchanges, 24/7, 365 everywhere in the world. So on Saturday night, if you need $1 billion of credit, you can get $1 billion from the Bitcoin network if you want to pay the right amount. If you want 100-to-1 levered bet negative, you can actually either you can place $1 billion bet in a minute, you can extract $1 billion of credit. So it is a monetary network that's giving you leverage and liquidity. Like literally it traded like $100 billion in like 48 hours over a weekend or something. It is the most, everybody says, what's it good for? It's the most useful thing in the world if you care about money, because what it's good for is unlimited leverage and unlimited liquidity everywhere at all times for, in theory, 400 million counterparties, right? Anybody can jack into the network and trade peer-to-peer or via these crypto networks. So my view of Bitcoin is it's digital capital. And my forecast is it'll just decelerate from 60% to 20% as it goes from 2 trillion to 200 trillion. When it's 200 trillion, it'll still only be 25, 30% of the equity capital markets. And the drivers are going to be technology advance, money printing, inflation, and chaos. Now the issue is everybody looks at it and they think, well, the price is going up. What happens if the price stops going up? And the point that I make is the capital is flowing from a more insecure, more disordered state to a more secure, more ordered state. So it's kind of like go to a mountain lake and watching water flow over a waterfall and saying, well, what happens if the water stops flowing downhill? And the point is the water's flowing downhill because of physics and thermodynamics. It's not accidentally, randomly, speculatively, just happens to be going in that direction. And if I take you and I give you $1 billion and I drop you in Africa, and then I say you have to buy a diversified portfolio of African real estate, bonds, currency, derivatives, and companies somewhere in Africa and hold it 100 years, you're going to have a panic attack. And then I'm going to say, or you can just have Bitcoin and you can put it in Singapore, Monaco, London, Paris, or New York in a couple of minutes, risk-free. Would you like to punch the orange button? And the answer is, of course. As a practical matter, and I've looked everywhere in the world, and I've been everywhere in the world, the number one currency is the dollar. The second best currency is the euro. If you go to Europe, there's a 99-to-1 predilection to convert your euros into dollars. The Europeans don't want to be in Europe, okay? The billionaires don't want to be in France. I have a bunch of billionaire friends. When I go to France, I say, I'm here. They go, and they're sitting on $200 million villas in France. You know what they say to me? They say, find me at my apartment in Monaco. Okay, so here's what's going on. Everybody in Africa wants their money out. Everybody in Russia wants their money out of Russia. Nobody in China wants to keep their capital in China. No one in South America wants to keep their capital in South America. Everyone is fleeing to the US real estate market, the US securities market, the US currency. And if they can't move their capital there, what's the second best idea? Well, What if I had Bitcoin, which I self-custodied, which was supported by the US capital markets? And so when I say that's my forecast, what I'm saying is capital goes where it's best treated. People are waking up to the idea that they can put their money in cyberspace. Then the next issue is, well, what's the dominant crypto monetary network? And there's 15 million tokens and there's 10,000 crypto whatevers. And when you look at it, what you conclude is 99% of the true capital has been invested in Bitcoin. My company spent $33 billion to get 2.4% of the Bitcoin network, and it's real money. So do the math in your head and figure out how much real capital has gone into Bitcoin. You know, the second best, like find me, I challenge you, find me one public company that's ever invested $250 million in any other crypto network as
So
a store of
why
value.
own Strategy as opposed to just owning Bitcoin directly?
Bitcoin is crypto commodity. And if what you want to do is own raw commodity, like raw land, then you would buy Bitcoin. It gives you the least counterparty risk, the most optionality, the best tax treatment, the most optional counterparties, et cetera. So if your time frame is very long and you have an uncertain future and you want max optionality, you should definitely own Bitcoin itself and be in a position to self-custody or change the custodian to any custodian in the world at any point in time. My company is a US seasoned issuer. We're one of 400 companies in the world that's a seasoned issuer. And what a seasoned issuer means is we can file a registration statement with the SEC on Monday morning and sell $2 billion worth of securities by Monday close of market without waiting for permission. There's only 400 companies in the world can do that. How many companies in the Bitcoin space can do it? Like two to four. There's 4. We are 10 to 100 times bigger than the other 3. So we're like sitting with almost 50 billion of permanent capital as the seasoned issuer with the largest pool of Bitcoin in the world. And so what our business strategy is, we're securitizing the market. So it's like we're going to borrow money at 0% interest. Like we just issued $5 billion of convertible bonds at 0% interest, and we're going to invest it at 60% return. Right. So we're borrowing at 0, investing at 60, scraping the difference for our shareholders. Or so like 2 weeks ago, we did a $2 billion bond. We did it at a 62% spread. We made $1.2 billion in 3 days upfront, no risk. And if you crank in a 25% ARR for Bitcoin over 10 years, we'll make $20 billion on the back end, of which 62% of that accretes to our common equity shareholders. So those are the things we're doing. When we sold a preferred stock, we sold Strike to the public. And what we did is we sold a convertible preferred, took it public. We backed it with Bitcoin. The conversion price was $800 a share when our stock is trading $250. The spread on the instrument's 82%, which means that we made $420 million on the day we sold it up front. And then we agreed to give 8 to 10%, and let's say 10% of the return of Bitcoin to the buyers, and we keep everything else. And our forecast is 30 to 60. So we either got 30% and we pay 10, or we got 60% and we pay 10. But if you do the math, what we're doing is we're basically tapping the fixed income markets. We're selling Bitcoin-backed bonds, Bitcoin-backed preferreds. Our next thing to do is to sell straight fixed income, like a preferred stock that gives you like 10% coupon at par. And I'm going to do a perpetual swap. I'll pay you 10% in US dollars forever. I'm loaning the money to Bitcoin, getting paid 30 to 60%. But let's just take my base case. I've already told you 29%. I'm going to get paid about 30% for the next 20 years. I'm going to give you 10%. We get 100% of the yield up front, right? I do $1 billion deal and I get $1 billion of Bitcoin up front that I invest at 30%. I pay you 10% and a fixed thing on the back end. If you're good at exponential math, the conclusion you'll come to is that I'm going to have $10 billion in capital in 10 years, making $3 billion a year, and I'm going to be paying 100 million. So I'm keeping 2.9 of the 3 billion. And so the profit on the instrument on the back end is obscene. But if you're investing in my company, you're investing in a Bitcoin treasury company that intends to issue hundreds of billions of dollars of fixed income instruments at a premium, buy Bitcoin, drive the price of Bitcoin to 10 million a coin, right? End up with 500 billion to $1 trillion in Bitcoin. We're aiming for a 2, 3, 4x multiple, right? And then you get to be a participant. Now, how you participate, if you're a Bitcoin maxi, you buy the equity, you're on the roller coaster, and you either get to sell the volatility or you get to borrow against the equity if you want, and you get 1.5x to 2x Bitcoin. So that's one way to participate. The other way is people to buy the convertible bonds. The convertible bonds have outperformed Bitcoin. So you get all the upside of Bitcoin, none of the downside of Bitcoin, a different volatility profile, and you get a credit guarantee. You get guaranteed your money back in 3 to 5 years, and you're senior in the capital structure. That's a different way to participate. The third way to participate is you buy Strike. Strike was trading with a vol of 40 yesterday. It's completely uncorrelated to Bitcoin or to MSTR. It's even uncorrelated to the S&P risk assets, but you get a perpetual 9% coupon forever, and you get about a 35 to 40 delta instrument. So you're getting like, which works out to be like 75 to 80% of the upside of Bitcoin with the dividend, with the principal protection, with an uncorrelated profile, right? And so we're just going to give people whatever kind of security they want. And if you had if you're Millennium or Citadel and you've got billions of dollars to do convertible arbitrage, you kind of need that instrument. And if you're an equity capital markets person and what you want is extremely highly levered Bitcoin exposure, then you want the MSTR instrument. But there's a lot of degens out there, and what they want is they want the out of the money short dated call option that's got a 20x multiple on the rip, and like you can't tell people how to trade. And the beauty is, and like we're even the #1 short instrument. I think people are like $40 billion short in our options market right now, and that actually helps us too. So
what's the short interest overall? Days to cover?
I can't give you that number. I don't have to have it off the top of my head, but I think the open interest in the company is like 65 billion in the options market, and it's skewed short, not long. So lots of different trades, the Susquehanna people, the Citadel, the Millennium, every different type of investor. And the secret to our company is you need a seasoned issuer with a lot of capital, permanent capital, in order to create all of these securities with these risk profiles. And people want the volatility. Our vol is 100 right now. Okay, that's #1 in the S&P, right? So there is no company you can buy in the S&P index that has a vol that's anywhere close to us. So people want the vol. They want the liquidity. The stock trades 5 billion a day. They want the liquidity. They want the open interest. And then they want all the other flavors. And so we just give people what they want. And you have to be a US-based seasoned issuer. And here's the other thing. You have to be 100% Bitcoin. People go, well, why don't you diversify? Why don't you, like, I could put 25 billion into treasury bills. It would destroy the volatility, destroy the performance, destroy the uniqueness of the company. So the secret to our company is we have accepted one existential risk, which is space aliens land tomorrow and zap Bitcoin irrevocably forever with, no controversy. And if the space aliens come and do that, then then all of our securities are probably going to go to zero. But after you accept that one existential risk, we construct a financial machine that has very unique, favorable, attributes
Michael,
to $500 trillion of capital
what
markets.
percent is institutionally owned currently, and how rapidly do you think acceptance will take place?
What percentage of what?
Bitcoin trading globally, or Bitcoin held, cold storage?
Well, I mean, that's a difficult question to answer. I mean, I've seen numbers that suggest that 84% of Bitcoin was held by individuals, but it's untraceable because it's all dark. But on the other hand, if you look at the ETFs went from 6 institutional holders to 3,300 institutions that filed like 13 Fs in 12 months. Massive uptake. And so I think a great majority of that is institutional, and that was $140 billion of capital in a hurry. So, and I know I look at my company, right? We have massive, our big holders are BlackRock, Capital Group, Vanguard, Fidelity, Morgan Stanley, lots of institutions. So I think that, I guess here's what I would say. I would say in the crypto winter, when everything melted down, what was at the bottom of 2022, like when FTX blew up?
Yep, Sam.
Okay, in the crypto winter, what happened was you had a lot of crypto cowboys with extremely irresponsible levered positions. Genesis, BlockFi, Celsius, FTX, Three Arrows, Terra Luna, all these were massively levered positions, and they all got wiped out, bankrupted. Half the guys went to jail. All those entities went bankrupt, and all of that leverage got zapped out of the system. And there really wasn't much institutional participation there because the big institutions were blocked. There was a secular rotation in 2024, and what happened? Well, the ETFs went from nothing to 140 billion. The Bitcoin standard companies, my company included, went from, we were like 2 or 3 billion at the bottom of this, and we went to 100 billion. So you went to $150 billion or more of publicly traded companies. So you've all of a sudden got 100, 3, 4, $500 billion of institutional capital, which is patient, long-term store of value. And that replaced what was 20 to 1 or 50 to 1 leverage, like, on Luna token. There's like 20 billion of UST backed by 60 billion of Luna. And that was all just air token. And so the primary source of leverage in that early bull run was, I think, air token leverage. And right now, the primary boost for the existing market is institutional money flowing into either the companies or the ETFs.
So speaking of that, you're going to DC for the White House Summit on Friday. What do you hope to achieve there? And do you feel like the government is suddenly going to be running a crypto hedge fund?
I think the entire turn of developments is massively bullish for Bitcoin, massively bullish for the industry. You can't interpret any of this as other than positive for most every actor. The previous White House never mentioned Bitcoin. I don't think anybody in the administration, with the exception of Gensler, really knew anything about the industry. They basically would have said, well, Bitcoin, maybe that's something. Every single thing else in the industry was viewed with hostility, anathema, as something to be stomped out, with your boot. And I've said many times, well, Bitcoin is either a legitimate institutional asset, it is digital capital, or it's not. But if it's not going to zero, it's going to 1 million, right? Because as soon as you acknowledge its legitimacy, then there's $500 trillion of capital floating out there. And when 1% of it flows into Bitcoin, it's got to go to 1 million and then 10 million. 1, 2, 3% is all it takes for this thing to blow past the market cap of gold. So the only thing that's been holding Bitcoin back is, you had this parade of cynics that said, well, it's tulip bulbs and it's a scam and it's a Ponzi scheme. And that held it back a bit. And then after that, we got to the skeptics who said, it's okay, fine. It's a crypto asset. It's pharmaceutical grade gold. You can't make any more of it. You can teleport it at the speed of light. Computers can use it. It's 1,000,000 times better, faster, more useful than gold, and it doesn't have any of the defects of gold. Aha, therefore it's too good to be true, and the government's going to ban it. Like literally, I heard this so many times, right? I could name all of the talking heads that they wanted to show how smart they were, and their argument was, well, yeah, it's real, but it's too good to be true. The government's going to take it away from you because it's a threat to the dollar. And I think it's pretty clear, right? The writing on the wall here is the president. I got this invite yesterday and it says the president of the United States invites you to Digital Asset Summit at the White House. And I looked at it and I think the point really to all the skeptics is the president of the United States is not inviting every leader in the industry to the White House to crush us under his boot. Right. And so we've gone from it's tulip bulbs to it's too good to be true from that to it's a speculative asset. That was the next thing. I'll buy it and I'll sell it, but it's very dangerous. It's very that was the Gensler language. It's a speculative asset. And we've just gotten to like stage 2 or stage, I would say on the journey you get to investor, it's a good long-term store of value. And Trump this weekend said, we believe in Bitcoin. It's a long-term store of value, right? Howard Lutnick literally just said it this morning. The leading candidate for governor of Florida, Byron Donalds, said it on television 2 days ago. I'm going to put it on the Florida balance sheet. So we have moved from stage 5, tulip bulbs, to stage 4 skeptic, to stage 3 trader, to stage 2 investor. And the only thing higher than investor is maximalist, where you say, Bitcoin is economic empowerment to 8 billion people. It's important to the human race. It's going to lift the civilization out of the dark ages.
Who has the best regulatory environment globally right now?
Nobody has. At this stage, everybody talks. You could almost argue the Brazilians, are the most liberal, maybe in Brazil, but they haven't really leaned on it that hard. As a practical matter, no financial regulator anywhere in the world is going to do anything until the United States and Washington, D.C. lays out the digital assets taxonomy and provides clarity, and then they will all follow at various speeds, but they're all afraid to get stepped on. And and I think the way to think about this simply is there are 4 big ideas in digital assets. There's digital currency, there's digital tokens, there's digital securities, and there's digital commodities. And if you start with the idea of a digital token, it's an asset with an issuer backed by digital utility. It's like Rogan coin or Katy Perry token or Trump coin or whatever. And it might be Solana. It might be, it might be any kind of, Uniswap, DeFi, anything in the world. How much utility you give it is up to you. It could be no utility. It could be a meme coin. It could be a lot of utility. As long as you stop short of giving it financial utility that makes it a security, you're probably good. There's a market to issue 10 million of those things. And the use case of a digital token is capital creation. And right now, there's nowhere in the world where they have a good law for issuance of a digital token. And we need one, and it'll start in the US. And if we do, you're going to, right, the use case, the ethical argument for a digital token is 400 million businesses can't access the capital markets. 400 companies like my company can issue securities same day without waiting for permission from the government. So how about we stretch from 400 companies to 400 million? That is the ticket for innovation and capital creation. The second idea is digital securities. This is what Larry Fink wants. I want to tokenize stocks and bonds and maybe commodities, right? I want digital share of Apple, digital S&P index. I want, digital bonds, digital ounce of silver, and I want to move it at the speed of light on a mobile phone. Okay, that's for capital innovation and efficiency. What's the opportunity? Well, you export $10 trillion or $100 trillion of US securities to China, Russia, move them at the speed of light, let the AIs trade them 1 million times a minute on Saturday afternoon. You get to take self-custody. Like, wouldn't it be nice to have my own Apple shares on my own iPhone? Why not? That's the idea. Those two ideas Gensler did not ever acknowledge. Gensler's position was, if you're an issuer, you're a security, roll over and die. By the way, if you issue the security, it's illegal to trade it on a crypto exchange or self-custody. So there was no acknowledgement of a token or a digital security. Digital currency is that third idea, which is just a US company or US bank issues, $1 billion of Circle or Tether or whatever, stable coin, and then you let it circulate friction-free at the speed of light everywhere in the world. The opportunity is to go from 100 billion to 10 trillion. It's worth $10 trillion to the US. They'll sell 10 trillion of short-dated treasuries to back those things. You would see the Canadians, the Mexicans, the Brazilians, the Nigerians, the Russians, the Chinese, the Europeans, everybody in Africa, they'll all just flip to the dollar, right? The dollar will be truly the world reserve currency as a medium of exchange when you get out of a taxi cab in Nairobi, right? When you do anything, everybody would flip. If you had that, there'll probably be 100 issuers of that, right? And then the last idea is digital commodity, an asset without an issuer backed by digital power, that is Bitcoin. There probably won't be more than a dozen of those because, what's the use case of that? Capital preservation. Okay, so you think Joe Rogan and Katy Perry want to create the next Bitcoin? No, like they just want to sell $10 million of tokens overnight in 4 hours and keep the money, right? So the real crypto industry doesn't want to compete with Bitcoin. And if you study the history of money, glass beads get demonetized by silver, which gets demonetized by gold, which is getting demonetized by the S&P index, which gets demonetized by Bitcoin. Everyone's going to go to the best monetary asset. And so what we need and what the world doesn't have is we need this common taxonomy of a commodity, a digital commodity, digital security, digital currency, digital token. Then you need clarity from DC, and then you need for the regulators in DC to say it's okay for the banks to handle these assets. And when that happens, US capital markets explode in the Cambrian explosion of innovation. You see 10 million tokens issued, you see trillions of dollars of debt that's bought up to back the currency. Then you'll see everybody else in the world just copy. By the way, even our enemies, like the Chinese, they'll just copy us. They're scared to death to do anything other than what we do. And you saw that like with Hong Kong ETFs. So, coming back to Friday, look, I don't know what'll happen on Friday. They've invited probably the 20 to 20, in my opinion, the 20 to 24 most influential, probably most systemically important in the crypto industry there. It's a good representation, which is great. And I think that all of the language coming out of the SEC, look, the SEC unraveled every one of Gensler's enforcement actions in 2 weeks, right? Every important one. So I think that the language of the SEC is good. I think that Quintez at the CFTC is very positive. I think that Treasury is positive. Lutnick's comments are very auspicious. Ultimately, this is a government that's led by a very powerful figure, maybe the most powerful figure in our lifetime. I mean, you can almost literally watch the camera rolling and Trump signing an executive order, looking over at Howard saying, Howard, why don't we go ahead and put 50 billion of that into the sovereign wealth fund? And why don't we do this for 100 billion?
So what number do you need to have statistical significance in the crypto fund? How much would you be satisfied with? And what number would be disappointing to you on Friday?
To tell you the truth, it doesn't really matter what the government could do nothing, and we've already won. At this point, there are only various degrees of winning, because there are three systematic things that have to happen for Bitcoin to go to 10 million a coin. One, you needed it to be endorsed as a commodity by the SEC, and that's done. Two, you needed the accounting profession to remove their prejudicial accounting treatment. It needs to go from indefinite intangible to fair value. That's done. Three, you need banking acceptance in the Western world. You need, basically, Bitcoin has been debanked or unbanked.
The Operation Choke
You
Point.
need JP Morgan, Morgan Stanley, Bank of America, Wells Fargo. You need them to accept $1 billion wire transfer, buy $1 billion of Bitcoin, hold the Bitcoin and loan you money against
So
the
when
Bitcoin.
will that happen?
I think it happens sometimes over the next couple of years. You know, you need the SEC removed SAB 121. That was a crippling limitation. Now you need a little bit of guidance from OCC and I guess from Treasury. I'm expecting we'll probably get that. I think the banks by their very nature are very conservative. They crawl forward very slowly, and only a couple will leap forward. So I guess my estimate is over the next 4 years, you'll see some of them. I'm not going to say over the next 4 weeks or 4 months. I know there are rumors in the market that like a BNY Mellon or others are doing it, but they're also doing it with training wheels. So I think that Bitcoin goes to $1 million a coin without the banking support. With the banking support, it goes to 10 million a coin. If we come back to the discussion about crypto reserves, digital asset stockpiles, Bitcoin strategic reserve, here's what I would say on that. I think that there's pretty broad consensus in the industry that if you're going to create a strategic reserve with legislation over the long period of time, you know, and set it into law, it's going to need to be Bitcoin based, because the only way to get bipartisan support for a single asset is for it to be an asset without an issuer, without a company behind it. And so I think if you're going to get 60 senators to vote for this, you can achieve that with Bitcoin. You will not achieve that with any other token. Tokens are assets with issuers, right? I side with the industry in saying they ought to be able to issue their token without getting sued by the SEC. But I also take the position that you shouldn't capitalize a country or a company on a proprietary asset, whether it's a security or a token. You should capitalize a company or a country on a commodity or a property that no one can control. Because if you can put leverage on a token or put leverage on a security, like what happens if my company buys Yo-Yo coin levered 100 to 1 and we put $1 billion of leverage on it and it trades to $1 trillion market cap, and we write up our balance sheet to $500 billion overnight and start borrowing against it? You don't want to do that with a public company, because you daisy chain the leverage. That's probably the logic of the SEC 40 Act, which keeps you from having more than 40% of your liquid assets in a security. You don't want to do it with a nation state, because you don't want a company, an individual, or another country to be able to censor the protocol, corrupt the protocol, control the protocol. So I think that there is a lot more focus on Lummis's strategic Bitcoin reserve bill that'll move forward. I think that if we see other assets supported by the government, they'll probably find their way into a sovereign wealth fund, which you could do with executive order. That'll really be up to the President of the United States. All of that's above my pay grade. There's a 6-month deliberative process, which includes 12 members of cabinet, and you'll see 2 committees in the House, 2 committees in the Senate, and probably 10 important actors in the industry and the President of the United States. They will all opine on that, and something good will happen. Nobody knows exactly what that good is, until it does happen.
Thank you, Michael. We're going to take questions now.
What's your view on the second coin on Ethereum? Because it seems to me like I've been following the industry, and the small coins really it's quite kind of falling sideways.
In my opinion, Ethereum is a token. It is not a commodity. And it has a future in a framework where there are digital tokens that are allowed. It'll compete with Solana and lots of other tokens on its own merits. And you ought to invest in it as though you're investing in a token. You decide how you want to do that, but I don't think it's a commodity. Yes, sir.
Michael, thanks for sharing your vision with us today. I'm curious, when you think about the scale of the growth for your own company, how you dimension that or proportion that. Do you think of it relative to the market cap of Bitcoin? Do you think of it relative to the total amount of capital that exists? Like how do you determine how fast you can grow?
Our growth rate's really only limited by our ability to raise capital. And so in the first 3.5 years after we adopted the Bitcoin standard, we raised about $6 billion of capital. And then in the first 3 quarters of 2024, we raised about $4 billion in capital. And then in Q4, we raised $18 billion in capital. And in the first 2 months of this year, $5.2 billion in capital. So we're doing this. Our plan will be, to raise capital this year, equal to or what we did last year. And if we can go faster, we'll go faster. And the ultimate goal, look, we're tapping into the fixed income markets. There's what, 300 trillion of fixed income. So I want 1% of it. So like, could I raise 100 billion, 200 billion dollars of capital? Sure, I could. And if we raise hundreds of billions, then we'll buy Bitcoin with it. We'll have 500 billion of Bitcoin, and the market cap of the company will be 2, 3, 4x that. And then we'll be doing it. Our goal will be to keep growing 20% a year. So the growth rate of the company is the Bitcoin growth rate plus our capital growth rate. So Bitcoin's been going up 60%, and we're 95% each year by levering. If we stopped raising any capital tomorrow, we're a $50 billion company growing 30 to 60% a year. If we stopped, but we're not going to stop, because the least risky, most constructive thing for us to do is to go sell 10 billion or more of a convertible preferred, go sell 10 billion or more of a fixed income preferred, continue to be the biggest issuer in the convertible bond market. And then if we ever need to delever, just delever with the equity. And so we will go as fast as the capital markets allow us. And the challenge with the capital markets, right, is the capital markets will open and close on a dime. Like, after November 5th, right, we sold $15 billion of equity in 6 weeks, and the stock was trading up and the premium was expanding, right? And then all of a sudden it closes. We're like, oh, last week we sold nothing. And the convertible bond market, it opens and it closes. And now our real focus with these IPOs of like Strike is to just open up. You could think of it as like a proprietary fixed income ETF. We're just going to open that up and we're going to sell it to fixed income investors. And then that will grow at whatever rate the market gets educated. And there's just a lot of education of the market about the credit risk of Bitcoin and the appeal of credit. Like I think that our instruments ought to be investment grade. We're 42 times over collateralized on our senior convertible bond, and it trades with a credit spread of 500 basis points. It ought to be 25 basis points. So we've got to educate the banks, the credit rating agencies, the big fixed income investors. That's going to take time, but it's a worthwhile mission. It's kind of fun. I'm enjoying it.
Hi, Michael. Thank you so much for being here. After we heard about the announcement of Bitcoin being included as part of the US Strategic Reserve, as well as with widespread adoption of Bitcoin, digital currencies, other digital assets, especially with retail adoption and institutional adoption, do you think it's going to lend itself into a lot of regulatory oversight? What do you think could happen in the future as far as regulatory intervention is concerned, and how do you think it's going to impact valuation, and how can investors protect themselves? Thank you.
Well, if you're looking for the safe harbor, if you said to me, I have $1 billion or I want to borrow $1 billion and bet on something, the obvious idea, if you want to make 10x your money on $1 billion, take $1 billion in cash and buy Bitcoin and hold it. There is no uncertainty. It's a commodity. And if your use case is long-term capital investment, there is zero controversy anywhere in the world. China would agree, Russia would agree, the US would agree. Every major country that's not communist would let you do that. And if you want to make 100x your money, I would say buy $1 billion of Bitcoin with somebody else's money. So either raise the capital or borrow the money and buy Bitcoin. And so the only institutional recommendation I make right now is buy Bitcoin with money that you've either raised as equity or money you borrowed or the money you have. What I just laid out was the ideal regulatory framework, which has not been instantiated. If you want to invest in tokens, digital currency, or digital securities, there is no legitimate path to do it right now. You're basically front running an uncertain environment, and you're going to have to wait for Washington, D.C. to tell you. The time frame of the executive order was put something on the president's desk by the third week of July. And so I think that we will have clarity on tokens, currencies, and securities, and thereby digital exchanges and every other idea by that point. And I'm not saying you have 100% clarity. I think you'll have like an 80% idea of what's going to happen. But ultimately, you know, you have to wait for the law to codify, or at least for the administration to put into practice some rules. And this is why I say you're really kind of at a perfect inflection point, because it's not a slow motion train wreck, because that's the wrong metaphor. It's the opposite of a slow motion train wreck. It's a slow motion parade of wonderful things. They're all going to happen. We know they're going to happen. There's a 98% chance they're going to happen. I just can't tell you exactly the date they'll happen, but I think over the next 4 years, everything you could want that's good is going to happen. And so the market is discounting that. The market doesn't believe any of that. All right. So the idea that you could actually buy Bitcoin at 80,000 right now is a joke. What I said is, when the bank lets you buy it, when Bank of America lets you buy it, and you can just order it and buy $1 billion at a time, it'll cost you $1 million. And when the bank, when your traditional banker recommends it to you because it's growing 20% a year and it's risk-free in their opinion, it's going to cost you $10 million. And so you can wait until it's easy and risk-free and you'll pay 100 times as much. Or you can do the research and jump through a few hoops right now for Bitcoin, and you get a 99% discount. With all these other things, it really is pre-regulatory venture capital, and all the tea leaves and the planets are very much aligned, but we don't have clarity yet, other than the fact that the administration's not going to beat you to death, which is what they were doing 2 weeks ago, right? They're not going to attack you, but you don't know exactly where the bright lines are going to be drawn yet, because everybody's enthusiastically pursuing that.
Is your Bitcoin in cold storage, and are you worried about quantum computing breaking codes?
We do hold our Bitcoin in cold storage, and I'm not worried about quantum computing. It's the latest round of FUD, but I just make a couple of points. If Microsoft and Google had a quantum computer that could crack cryptography, it would destroy their own companies. But Microsoft and Google would go to zero tomorrow because the entire internet and everything they sell is protected by the same cryptography that all these people speculate the quantum computer would break. They know there's no practical use case for those two quantum projects yet. If they sold it to Dr. Evil, then Dr. Evil would literally destroy Microsoft, Google, the US government, and drain all the bank accounts in the world. So you really think that they believe that they work? They're not, Google's not going to sell a product that destroys their own company and their own stock. And it doesn't take much consideration to realize that it isn't really a threat to modern cryptography. It is very, very useful to a crypto entrepreneur trying to convince you to give them $50 million to develop the next quantum resistant Bitcoin. So for fundraising, it runs hard. And it's very useful for someone that wants to get marketing attention or grandstand or become relevant. It's like, your world is going to end next Tuesday unless you give me all your money. So it's very much used in that respect. But the whole idea, the theoretical idea of a computer that's so powerful it cracks the cryptography that runs the internet and protects your money in a bank and protects Bitcoin wallets, that is an idea that maybe the world will face as a risk in 10 to 20 years. And when it does, the same engineers at Google and Microsoft that are crowing about quantum, they will also be releasing patches that will be adopted by the US government, your bank, the Bitcoin network, and Google and big tech. And everybody will just upgrade their crypto protocols at that point. The part that people don't get is Bitcoin is a protocol for money, for keeping your money forever. Just like English is a protocol for communicating and base 10 math is a protocol for math. In 30 years, when Dr. Evil has a quantum computer, we're not abandoning math, we're not abandoning English, and we're not abandoning Bitcoin. We're simply going to protect our math, our English, and our money with an upgrade to our software, right? Because why would you change from English to the quantum resistant Swahili language? It's like, are you crazy? I'm just going to upgrade my defenses, okay? When you understand it's a protocol, you're like, $1 trillion of smart money decided they wanted to keep their money forever. What are they going to do if there's a threat in the future? I think the smart money is going to respond to the threat, because why wouldn't you?
When do we hit the coin maximum?
The beginning of January 2035 is 0.99. That's the point at which 99% of all the Bitcoin is mined. The network effectively is fixed. The residuals coming out of the Bitcoin miners become third order or fourth order de minimis. We should see a reflexive supply shock. So you've got about 10 years until there is no natural seller, and this thing becomes the hardest asset in the universe. I think if you're going to accumulate anything, you do it between now and then, because at that point, no one's going to want to sell you their Bitcoin unless it's like trying to buy a lot in Palm Beach on the beach, to build your house. And you're like knocking on doors and people are like 200 million for you, maybe.
Thank you, Michael.
Thank you for your time today.
That was wonderful. Thank you both. So I want to just quickly run through some of the confirmed events that we have coming up. I think many of you already know that we're hosting Secretary of the Treasury Scott Bessent tomorrow. And so we're very excited about that. Hope you'll join us. That's followed on Friday, March the 7th, by Governor Ron DeSantis. We'll be down in Palm Beach, and there are still seats and tables available. On March the 13th, we welcome Zanny Minton-Beddoes, who's the editor-in-chief of The Economist. Later in the month, speakers include Nathan Sheets of Citi, Jonathan Gray of Blackstone Group, and Bill Gates. April's shaping up to be a full month as well. We have Mohammed Al Arian, Larry Fink, and Austin Goolsby, as well as Darren Achimochoglu and Dan Loeb. So we encourage you to mark your calendars, join us for these programs. We're really delighted that they're all coming together. And before we close, as we always do, we want to thank members of the Centennial Society joining us today for their support as they provide the backbone, financial backbone for what we do at the club. For everyone joining us virtually, thank you for being here. We look forward to seeing you hopefully tomorrow. And for those here in the room, please enjoy your lunch. Thank you.